Welcome back to Market on Close. U.S. stocks still down near the lows. Bonds have had a back and forth day with treasuries basically neutral. Let's bring in Scott Bauer and talk some more about the trading environment with the CEO at Prosper Trading Academy. Scott, good afternoon. Good to see you, sir. What's up?
Hello there. How are you?
Doing pretty good. Stocks getting beat up. Bond yields not to blame, but what do you make of the treasury market? Scott, it's been pretty interesting here. It's trying to sell off a few times today. Auction was a little bit weak. What's going on?
I think there's a lot of confusion, actually. You look at the 2-year is the only one that's really up today in terms of percentage, interest rate percentage, not the bond itself. Bonds have sold off. Rates are up. The others are all pretty flat. You look at the 10 going out to the 30. I think it's a little bit of a complacent market right now. Maybe waiting for the next data, the next CPI data, see what's going on with inflation, but taking a rest, really. I thought yesterday we saw early in the day especially, we saw, kind of a big rally there and rates coming off a little bit, or the other way around. We saw a big sell-off, but really just stuck in the mud here. And you look at the 10-year, which we all take, very, very close look at, trading on maybe the lower end of its range that it's been in over the last 3 weeks, but I wouldn't sell it short here. I mean, I think rates are probably going to start ticking back up again.
When you look at the potential that might have on the market, what do you think? Do you think this is a market still spooked if rates move higher, or do we have to get through the previous high for it to be scary? How sensitive are we at this point?
The market, there's the market psychology, right? And once we hit that 3% level, that was a big freak out moment for the marketplace. And now it's become a little bit complacent. It's become a little bit accepting. So I do think until we hit maybe 340 to 350 on the 10-year, if that happens again, I don't know that that's going to impact the equities so much as it would have done, just a couple weeks ago.
Mm. So bonds still seem to be kind of inching higher. Crude oil also kind of has this trend still intact.
Yep.
The two possibly related here. What do you think of all of the peak inflation, peak commodity talk, Scott?
I don't know how anyone can say we've had peak inflation, Oliver. I don't get that. I mean, I'm just measuring that by talking to friends, acquaintances, talking to people on the street, and people are concerned. People are really worried because the bottom line is they have the biggest expenses are their groceries, their gas, outside of rent or a mortgage, and they're just getting pummeled. So to say that we're at peak inflation, I mean, not only from the analytic side of it, I don't see what tells us that. I think people are hoping for that, but I don't see that happening. And I know what we're seeing in the commodity space. I don't know that reflects it either. I think we can all hope that's the case. But until we really start to see crude break down, and I'm not talking about the breakdown, the quick drawdown we saw last week and into last week, but until we start to see a sustained breakdown here, I don't know how anyone can say that we're at peak inflation.
Yeah, I'm with you there. Let's give it a couple prints at least, right, before trying to get ahead of the curve by too much.
Sure.
In the meantime, we've got the dollar firming up again. Some of the trades from the last week that seem to clear the path for stocks and risk assets to float higher, seemingly this afternoon, look like they're not going away just yet. Dollar firming up. Bitcoin never got above 22,000. So apart from that NASDAQ rally last Friday, is there anything else you're pointing to risk on? Was that maybe a fluke?
I mean, listen, it could have been the oversold nature of the markets here. That's very, very typical of a bear market bounce. The volumes last week actually were very affirmative of the rally, right? Rather than seeing a rally on very, very light volumes, the end of the week, we had massive volume. Now, that may have been, part of the Russell, who knows? But we had good volume. So that was actually a positive for the market to the upside here. And I thought yesterday's action was really good for the market that, we didn't follow through from Friday, but we also didn't have a deep sell-off, but then today came. So this really makes me in the camp of saying, yeah, that was just a, not a one-off because we see it, but a bear market rally here. When's the next one going to be? Well, SPY has a gap to fill here on the downside pretty soon. I think around 378-ish or so. So maybe that's, an opportunity here in the near term.
Okay. Scott, I like that. Anything else that jumps out to you as being an easy trade, or are those non-existent in today's market?
I'll tell you what I think the toughest trade out there. It's the same thing that it's been for probably the last 4 to 6 weeks.
I'll take that. I'll take the toughest trade. Gold.
Right? It's gold. I mean, flip a coin. I mean, it's got every reason in the world why it should be rallying. It's not yet. It's not breaking down is, maybe so much. It's just been coiling, consolidating. This thing is going to make a big move, Oliver, I think sooner rather than later. I couldn't tell you which direction. My gut tells me to the downside, because if it hasn't broken out to the upside yet, I don't know what the impetus is going to be for that. But to me, that's one of the tougher trades out there.
Wow. Okay. All right. Like that. All right. We'll keep our eyes on gold. Thanks, Scott. Good stuff.
All right. Thanks.
Mr. Bauer is the CEO of Prosper Trading Academy.